Welcome to my channel, everyone. Today I wanted to do a trade recap slash review, going over some of the plays that I took, why I took them, and what I was looking out for, along with some of the plays that I mentioned in the chat room. And I'm also going to talk about a really good lesson along the way about how at one point I was down $3,000 on a trade and how I turned that large loser into a $1,400 winner. Now you're going to get some really good points out of this video, so make sure to stick around for the whole thing. And before we do begin, all I could ask is that if you learn anything from this video, you enjoy my videos, if you could just hit the like button and also follow me on Instagram. I will link this in the description below. I post very good trading tips and tricks, and I post daily trading recaps on my Instagram story. Link to this will be in the description below. And without further ado, let's get right into the video. First thing I like always going over is the S&P 500. It helps give context. It's the overall market, and it'll help determine the other zones based off of our supply and demand imbalances from the other stocks that we do trade. This also is my favorite instrument to trade. I chart /ES, which is the future, and I trade SPY options around it. I will sometimes trade the future if it's a type of trade where I want to enter, put my stop loss, walk away without monitoring it very closely, kind of like a set and forget type of play. But today I traded the option, was my first trade. I traded SPY puts based off of this chart, and this was in my pre-market plan. Now every time I put my Discord chat room in my videos, I get a lot of questions, a lot of DMs regarding this. So the chat room, I only offer access to this for members of my course. And yes, I do offer a course which goes into very extensive detail about my supply and demand methods and my options trading. But this chat room is completely free to them, and I only offer the chat room to course members themselves, just because of the lessons that I offer and the lingo that we use in here really would only be understood by members that have went through my videos. So the first trade that I took was on the S&P 500, and let me pull this back up. So this was the pre-market plan this morning. I said we had a gap at 3584 that we may sell off into if we break the support level, which was right here on the chart. The demand zones below are all areas that I'm looking to take long. So right off the bat, it's important to have an understanding of your zones. It's important to not have a bias. You have to just play your levels, follow your plan. When your setups trigger, they trigger. So we broke below the support, and I'll show you what this support was. This was from a double bottom yesterday. So we kind of made like a W type of letter where we double bottomed and created a nice support level. We were gapping up towards the close, and then now in the overnight session, we were coming down and the market was selling off. And we're opening up right near the support level. So we saw that I opened up above it. In pre-market, we were bouncing off of it. We opened up above it, and I saw the market coming down pretty hard, aggressively, with zero bidders in the market. There was not a lot of buyers. Every time the market came up, we immediately got rejected down. You're really only going to see that from watching price action, not really going to be reflected from the candles after the fact that it happened. So as soon as we broke below the support, I was buying SPY puts out of speculation that this had room to go down from the 397 area all the way down 13 points into the 45-minute demand zone that we had down here. And this did work out perfectly, but I took this trade short once we broke below the support. Now this at one point was a very large loser to me. I traded 100 SPY puts. Here are my entries and my exits. I traded 100 puts of the 359 strikes. And I basically bought them at a pretty bad point. And this is a good lesson for you to never look at your profit and loss. So I got short below, I think 392. I wanted a little extra confirmation just because we had pre-market lows, and that's a good gauge. That's a good estimate to understand where we are in the context of the market. So as soon as we broke below the pre-market lows, broke below support, I saw zero buying pressure. I saw a lot of selling pressure. I took this trade short in this area. And at one point, my SPY puts, I was in at $1.84. I'm pretty sure these went to like $1.50 or so. So I was down about 3,000 bucks. And this is a mistake and something that not a lot of traders should look at. Never look at your profit and loss. If you were trading based off of how much you were losing or how much you were winning, psychologically, you're going to make decisions based off of either your fear or your greed. At one point, I was down 3,000 and I was looking at my profit and loss. And that's definitely a flaw that I have. And I always stress not to do it, yet I continue to do it. If you look at your profit and loss, it's going to scare you, especially if you are losing on a position. So I was in 100 puts, and then this stock or S&P started rallying about 7 points, 6 or so points. And at one point, like I said, I was down $3,000, and I was kind of a little hesitant, a little nervous. I thought this thing was going to reverse, especially that we broke below the lows. I thought it was going to be a trap for shorts like myself. So I had a mental stop loss that if we came below the support, above the support, I was going to stop out. And thank God we came below the support and it acted as resistance. I was about two or three ticks away from stopping out for a decent loss, but I stuck to my plan. I didn't trade based off of how much I was losing, and this helped me stay into the winner, and the market was selling off pretty aggressively. As soon as I got in a little bit profit, I sold 50 contracts at $1.93. And then once we got a further push down right into the demand zone, like a point before it, I sold the rest of the 50, and I was all out of the trade for an average of $1.90 or $1.98 from $1.84. If you average them up, 100 contracts. So I made $1,400 on this trade, and at one point I was down $3,000. The lesson here is to not look at your profit and loss. I'm telling you for sure, if you don't look at your profit and loss, you're going to make different decisions, and it's going to only be beneficial for you. Another thing to recognize was that every time the market came up, we got rejected. So this is what you want to see in downtrends. We come down, we rally up, and we reject. We come down, we rally up, and we reject. Same thing multiple times, multiple times. Look what happens when we come in demand. Now, I never look at a 1 minute chart. I'm just illustrating this example for you. We come down into demand and look at the buying pressure inside of demand. That is a very bullish sign. I didn't take it long right away just because the market was continuing to make lower lows and lower highs. So what I wanted to see was a break above the lower high that it made right here. And this is a valid entry for me to get long, putting my stop below the lower day and targeting VWAP. Now at this time I traded the future because it was something that I did not want to monitor completely, because there was a lot of other stocks, which I'm going to break down in this video, that we were watching on my screen, which had really good trading setups. So I did not want to monitor this, but the trade to get long, if you have a little more risk tolerance, you could get long at demand once we come up the first time. But just because how there was no buyers in this market, I wanted to wait to see if we could continue to break the downtrend and start forming an uptrend. So right above here at the 3591 was my entry, and my stop was right below the low. So I was risking about 6 points, and my first target was VWAP. Not the best risk to reward, but like I said, I was trading the futures, and it was a very high probability trading setup. So that was my short trade, and then that was my long trade. We actually acted as resistance first time we came up to the support level right here. But overall, this was a good trade, and we rallied right according to plan. Like, this thing ripped. I said I was watching for a strong move out of demand today, and it's like the market was listening to me. It happened perfectly out of 45-minute demand. And then if I go and show you my ES chart, or you have the zone here, we were watching this 30-minute supply zone, which we rallied out perfectly. Another thing I told members, if I could pull it up on my Intraday Commentary tab. So as the market is developing, every time price rallies, I state exactly what I'm looking at. I state what to do. Just because I have screen time and experience, I have and recognize different things comparing to the context of the market. You have to be a very contextual trader. You have to be able to react and adapt to what the market is actually doing in real time. So here in the Intraday Commentary tab, I told everybody to, if you're looking to short anything, don't do it the first time around. Wait for supply to reject. Even if it doesn't, then it's no trade. But if it does, you want to wait for a retest on that level, and then you could take the trade long or a short at supply once we retest. So here we came into the supply zone, and I did not take this trade short just because of I wanted to wait for a second retest. Look what happens. We get our second retest, it rejects. Third retest, we reject and sell off pretty nice going towards end of day. Apple is another trade that I mentioned in the pre-market plan. Now this thing on the 4-hour and daily looks ready to explode. I said I wanted to get long potentially on a pullback. I'm watching the balancing period at 119 to the 117.87 mark. So let me pull up the 4-hour chart, and this is what it looks like. We had a nice downtrend. Every time we come into the trend line, we reject. Same thing, we're continuing to make higher lows. So lower highs, higher lows, this thing's getting tighter and tighter. And we created a pretty nasty 3-hour supply zone, which we've been rejecting the past couple of days. Last week, hit it perfectly and rejected. That was a beautiful trade. Yesterday, we came right up to that trend line, right up to supply, stalled out. Not the best downside movement, but still respected the level. And today, we formed new demand from the area from the past 2 days. And then this rally yesterday validated that there was demand in this balancing period right over here. So I was watching the 119 to the 117.87 level for a potential bounce today. Apple opened up, sold off pretty perfectly, right according to plan. There's nothing really to this trade. It hit the zone perfectly, started rallying, and look where we stalled out at, right at this 3-hour strong level. Choppy in the afternoon, came up, broke high a day inside of a supply zone. That is a valid trap for longs, and then this thing rejected. So multiple opportunities throughout the day, but this 119 area is a very, very strong and important level that the market continues to bounce at in the past couple of days. Very strong level. Boeing was another monster trade. I know a lot of traders made very good profit off of this in the Discord room. So the pre-market plan stated that Boeing is on watch. As long as we are above 15-minute demand at 197, I'm going to be a bull. This thing is forming demand on a higher time frame, so we could speculate that it wants another leg higher, targeting 2-hour supply, which was from the pre-market plan yesterday. So there was the demand that formed, and Boeing came right into the 197 level, stalled out, nice volume, and we started reversing to the upside, forming new demand on the way, and I believe we were forming new demand on a higher time frame as well. But this thing ripped right from 197, completely ignored 2-hour supply. The volume was just so strong. There were zero signs of any type of sellers present in this market. Came up, no exhaustion from them. It was just consolidating flat. So beautiful long from the 197 15-minute demand zone. Last thing I want to go over is on Roku, and this was the plan that we had a 45-minute supply zone, and that every time we come into this level, we reject with ugly, pretty nasty wicks. So I said that today we were gapping up. In pre-market, we were trading inside of the level. Now, this is what the flip side of the strategy is, because if we start holding value, we start basing inside, and we start speculating that new demand is forming inside of old supply, we can look to take the trade long, which is exactly what we did. So I said if we base and hold inside of this level, it's very possible we finally break to the upside. And we also had demand below just in case price did want to pull back. But we rallied pretty hard, completely invalidated supply. So once we break above a level, it completely invalidates it. But we pulled back and we were holding value. We were basing out. And for another leg higher, this thing started ripping, pretty high volume. And then a very bearish indicator is once you break the high a day and you fail right away and you cannot continue higher with any increasing volume, no new buyers coming into the market, most likely the stock is going to reverse. So this was a very good trade. Just to show you the flip side of it, you have to wait for the market to balance out, hold value in an old zone, and you could take it long, speculating that new demand is actually forming. So I hope you all enjoyed this video. I hope I broke it down as best as I can. Hope you all could understand my thought process a little bit better. Going over some of the Discord trades that we took, my own personal trade, and a little lesson about to just trade the chart, not look at your profit and loss. It's going to help you in the long run. Hope you all enjoyed. Smash that like button, subscribe to my channel, and follow me on Instagram. Appreciate it. See you all at the next video.